Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Hey everybody, welcome to TradersArmy.com and our session on trading psychology. You know, it's the gray matter between the ears that becomes the biggest challenge that most investors and traders have when they start to get into the world of trading and investing. So the key here is to keep your head clear, because everyone knows how to make money in a market. Everybody does. We all know the secret, right? The secret to making money in any market is buy low and sell high. Right? I mean, if it were that simple, then everybody could just do it that way and everything's going to be okay. But think about it for a minute. Why is it so hard for most traders to be successful? What makes the difficult conditions for a trader or an investor to be successful in the financial markets? Well, when it really comes down to it, we've kind of been trained and conditioned to invest in a backwards scenario. Because if you think about it, we've been told to buy low and sell high. So we've also been told to buy when a stock has really strong earnings, and to buy when a stock is in an upward trend, and to buy a stock with good fundamentals and that has been upgraded and is in the strongest of sectors. So if you think about that for a minute, that's when we're supposed to buy stocks. Well, when do we sell them? Right? Because we only sell stocks when they have bad earnings, or when they're in a downtrend, and when they have bad fundamentals, or they've been downgraded, or it's a weak sector. So think about that for just a few minutes, because these are all things you've probably heard and read and seen all your life. We're going to buy good stocks and good companies with good fundamentals. Well, in that case, are you buying low or buying high? Typically, you're going to be buying high. And when you sell a stock that has bad earnings and in a downtrend, you're going to be selling low. So even though we know that we've been taught to buy low and sell high, what we've been conditioned to do is not the same. See, our goal, a lot of people's goal, is to buy high and sell higher because they want to buy good companies and hope that they keep going up, when in reality, it might be better to unlearn some of the things that we have learned. And so we're going to spend a lot of time when we talk about charting to finding those opportunities. But we wanted to make you aware in this psychology piece that you've got to have kind of an open mind about things. And there's a couple of keys to trading success that we're going to really, uncrack a little bit. We're not going to spend a lot of time on this, but we want to open our doors to it a little bit. And the first is a positive attitude for yourself, a commitment to learning, willing to put in time and practice, setting smart goals, and monitoring your progress. So let's go ahead and begin with that. So the first one is, what is a positive attitude for yourself? And it is very easy to get frustrated in trading and investing. It really is. It's one of those things where you feel like you're going to pull out your hair when the market doesn't do what you expect it to do. And not every day is going to be a winning day. Not every trade is going to be a winning trade. And you've got to maintain that positive outlook to know that things are going to come. And that I've seen time and time again from thousands of traders all over the world, becomes one of, if not the most difficult single part. So we want to eliminate that noise of getting down on ourselves when things don't go our way. And we've got to keep on smiling, whether we like it or not. And that's way easier said than done. But a great way to do that, in my mind, is to have pictures or things around you that make you realize why you're trading in the first place. And having that positive, attitude is a lot easier when you know there's a reason for any of the struggles that you're going through. It's, if you want to be able to have a better life and take your family on more vacations, or you want to find a better place to live, or you want to spend more time with the people that you love, have pictures of that around you. And it may sound a little bit odd for some people that are not of that ilk, but give it a try is what I'll say. And having that positive attitude for yourself is very important. Number two, have a commitment to learning. Having a commitment to learning. So one of the things that I have found in my years, and I've been trading for about 15 years, and one of the things that I found in the time that I've been doing this is that many of my friends tend to think that it's a magic trick. And they say, hey, can you show me a few things about trading? And they think that they're just going to get it overnight. And that is not the case. In your time as a trader or as an investor, you need to schedule time for learning. Schedule time. Put it on the books. And actually, if you use an iPhone or you use a Galaxy or whatever it is you use the calendar feature and schedule time to just learn. And learning includes, book learning and lectures and attending classes, but it also includes simulated and paper trading. And that really leads us to number 3. Be willing to put in time and practice. There is absolutely no substitute for screen time. There is no substitute at all for screen time. I think it's Malcolm Gladwell who talks about the 10,000 hour rule, that you got to do something 10,000 hours before you become an expert. I'm not sure about the number of 10,000 hours, but what I do know is that if you just think you're going to be able to step right in and get done immediately, that's not necessarily always going to happen. You've got to be willing to put in screen time. And screen time allows you to see repeatable patterns in the markets, but there are thousands, if not millions of different combinations that over time your eyes will get used to seeing, but not if you're not putting in enough time and enough practice. Now, using a coach or using a mentor is somebody that you can you can utilize time with a coach and with a mentor so that you can have better practice and better time spent, right? Practice, there's an old saying, practice makes perfect. I disagree with that. In my belief, practice makes permanent. So if you're practicing the wrong skills and you're practicing the wrong things, then it's not going to help you much. And that's really where having a coach and having a mentor comes in, is helping you to put in the right type of practice. Number 4, setting SMART goals. So a SMART goal, SMART is an acronym. Simple, measurable, achievable, realistic, and time-sensitive. So let's talk through that. A SMART goal is a goal that you write down. It's something that it's a goal that you write down. I think I read somewhere that a dream written down becomes a goal. A goal, which is measurable, achievable, realistic, and time-sensitive, is a plan. So a SMART goal really becomes a plan, and the first key is simplicity. And in simplicity, you've got to have simple, but it needs to be simple. And there's another S you could put there, and specific. So for example, you can't say that my goal is to earn income from the financial markets. It's not specific enough. You can't say that my goal is to grow my long-term wealth accounts. It's not specific enough. When we look at specific, we want to say, my goal is to average $100 a day. Now we're starting to get specific. Utilizing an account of $5,000 or whatever the number happens to be. My goal is to turn my $7,000 account into a $10,000 account. That's a simple goal, which is also measurable. If you just say my goal is to generate income from the markets, that's not simple, and it's certainly not measurable. So we have to have simple goals which are measurable, and also that are achievable. It's really nice to be able to say, well, in the next 3 months, I'm going to take my $5,000 account and turn it into a multi-million-dollar account. It's not achievable, and it's not realistic. Achievable and realistic kind of go hand in hand. I'm not saying not to set stretch goals, because stretch goals are amazing, but achievable and realistic goals are very important, because that goes back to the psychology. If you're making your goals so high that there's no chance you'll ever get it, it doesn't make any sense. It's kind of like jumping to reach a basketball hoop. If I'm trying to reach a basketball hoop and it's 10 feet high and I want to reach just so I can dunk, that's something that I could realistically do someday, and I could keep working at it. If it's 12 feet high, it's going to be harder. I don't think I'm going to get there. If it's 20 feet high, it's now become a goal that makes no sense whatsoever. And so why even try? So your achievable and realistic is important for the mindset. You don't want to waste energy on goals that cannot truly be attained. And the last one is time sensitive. Put a time on your goals. So if your goal is to take a $7,000 account and turn it into a $10,000 account, put a date that you'd like to have that achieved by. And you may say that my goal is by January of next year to turn a $7,000 account into a $10,000 account. That might be a very simple, measurable, achievable, realistic, and time-sensitive goal because it's something that's easy to see, it's realistic, and the key here is that it's got a date that it's due. So always set SMART goals. A strong recommendation is to not only set those SMART goals, but to write them down. Write them down, put them in your office. Put them somewhere where you're going to see them. Hang them on your mirror. Put them in your car. Put them all over the place so that they become ingrained in your brain. A great book to read is Think and Grow Rich by Napoleon Hill. Napoleon Hill reads Think and Grow Rich, and in Think and Grow Rich, he talks about the things that make a successful investor. And the most important thing that he talks about, number one on the list, if you will, is definiteness of purpose. And it's basically SMART goals. And definiteness of purpose is having a clearly defined goal as we go through. Number 5 is to monitor your progress. So monitor your progress. You can't just have goals that are out there that you're not monitoring on a regular basis. So journaling your trades, charting your trades is a very important part of what you're going to do. And not just monitoring the results of your trades, but also why did I enter that position? Why do I think it failed? And when you start to see failed trades that have a lot of the same whys as far as why they failed, then you'll learn not to do that anymore. So monitoring your progress is a major step to what you're going to do. Now, there are a litany of different books out there that you can read on psychology of trading, psychology of money, everything from Think and Grow Rich by Napoleon Hill to The Richest Man in Babylon by George Clason to Rich Dad, Poor Dad by Robert Kiyosaki, and the list goes on and on and on and on. There's thousands of books out there. The most important thing that I can tell you is if you think of these 5 things are really, positive attitude, commitment to learning, willing to put in time and practice, setting SMART goals, and monitoring your progress. That will get you well on the way. Read those other books as enforcements to what you already know. Thanks for taking the time today to listen to our session on trader psychology. If you've got a question, send it out to us. It's support@TradersArmy.com or send us a tweet @TradersArmy. And thank you so much, and we will see you again very soon.